All right, you guys, welcome to Generational Compounders. Today is entry to trading the markets. And I am Io Femi, owner of Generational Compounders, and our goal is to help create different streams of income that you can compound for generations. All right. So today we are doing a very intro to trading Forex markets. That is the market that we're going to be discussing today. All right. So, what is Forex? This is the global financial market, okay, that provides a platform for individuals to trade currencies, right? Now, if you predict that a particular currency will become stronger relative to another, then your prediction is accurate and you can earn a profit. So that is Forex in two sentences. Okay. We are trading currencies, USD yen or pound versus the yen. We are trading these currencies, and whichever currency becomes stronger relative to the other, if your prediction is accurate, then you can earn a profit. Now, I use the word prediction, but you have technical analysis and you have fundamental analysis. We're not going to get into fundamental analysis today, and I will briefly introduce you to technical analysis. Okay? So, current, and that's a misspelled there. That's supposed to be currency exchange. So, exchanging currency is something that is definitely necessary when you travel abroad. So, all of my passport holders, yay, you may be more familiar with exchanging currency than others. When you leave the country, usually on a flight, because some cruises you don't necessarily have to exchange currency, they go to pretty much US dollar. Uh, Islands and towns. But when you fly abroad, you may find yourself needing to exchange your US dollar for euros. And that exchange rate, that difference in the dollar and let's say the euro, is an exchange rate. And that is what we are trading in Forex. And that is how you make money in Forex when the price of a currency changes relative to the currency that you're trading. So, the foreign exchange market, which is Forex, is the largest market in the world, okay? Bigger than the New York Stock Exchange, okay? Bigger than the um, crypto, of course, because crypto is very small, but still bigger than the crypto market, also. All right. So let's just take a small little view of what we are speaking of. So on the right, you definitely have the globe, the world, different dollars, and we are exchanging these dollars all over the world. Now, compared to the measly $200 billion per day in volume of the New York Stock Exchange, NYSE, the foreign exchange market, which is Forex, because we're now outside of the United States, this is the foreign exchange market, is absolutely ginormous. It trades $6.6 trillion a day. $6.6 trillion a day fluctuates in the hands of different traders. And it won't be our retail traders. We are just a small, not even a drop in the bucket. We're like the little condensation on the outside of the bucket. So very small amount that we are dealing with individually. Now, the New York Stock Exchange, for those of you that do not know, this is the biggest marketplace in the world for investors to buy and sell shares of stock. So, it's the biggest marketplace in the world for stocks. Okay, Forex, we are not trading stocks. And for my true beginners, stocks are a share of a company. So when you are trading the stock market, you are trading companies. You're trading Apple and Walmart and Verizon. You're trading companies. When you're in Forex, you are trading currencies, different currencies from around the world. So I hope that kind of cleared up a little of exactly what Forex is and how you make your money in Forex. Okay. Now, the Forex market is open 24 hours a day and 5 days a week. Okay. Only closing down on the weekends. And I tell you guys, it be a sad day. Whew, when Friday night hits, evening hits, and everything is closed for the true traders, the dedicated traders, it is like, ah. But it also gives us a time to kind of breathe and come down from the high of the week or low of the week and kind of reset, and see what has happened. So, unlike the stock or bond markets, okay, the Forex market does not close at the end of each business day. So, when you are trading stocks, the stock market closes at 5 o'clock. Okay. You cannot press the buy button, the sell button after that time. It is closed. The Wall Street workers have left the building. The machines are turned down. The unit is nothing. Okay. Unlike Forex, we can trade. So 5 o'clock closes. That is New York. Okay. After New York, you have like the Aussie and the Asian session. Then you have the pound. And these are places around the world because the world is round. So when New York closes, guess what? There is another market opening all the time. It's 5 o'clock somewhere, right? So that doesn't just apply to drinking. With Forex, there is a market open somewhere, baby, as long as it is not the weekend. So excuse me, trading just shifts to a different financial center around the world. So like I said, when the New York Stock Exchange closes at 5, the Aussie exchange opens, and then the yen exchange open, and then the pound opens. So it just does not stop. All right. It goes on and on and on. As the world turns, so does the money. So does the exchange of money. It doesn't stop just because it's 5 o'clock in the United States Eastern Standard Time. Okay? It continues to go. So, what exactly is traded in Forex? Like, what are we, if we're not trading stocks, what are we trading? We are trading money, specifically currencies. All right. So, think of buying a currency as buying a share in a particular country, kind of like buying shares in a company. The piece of that currency is usually a direct reflection of the market's opinion on the current and future health of its respective economy. So if the US is having inflation issues, recession issues, it's a possibility that the dollar is going to go down, meaning other countries, when you go to exchange your dollar, let's say I go to Europe, excuse me, a country within the Euro network, and I need to exchange $100 USD, but my USD is going down because we're having all kind of issues in our economy. Then my $100, instead of me getting $100 in euro or $105 in euro, I get $92. I lost $8. Why? Because the price of currency is usually a direct reflection of the market's opinion on the current and future health of its respective economy. So in Forex trading, when you buy, say, the Japanese yen, you're basically buying a share in the Japanese economy. You don't own the economy. It's nothing like that. But you are vested in the Japanese economy going up because a buy signals a rise in price. A sell signals a drop in price. All right? So let's talk about it. Let's look over some nicknames and some Forex pairs, okay? So when we are trading the Eurozone, and it's called a zone because the Euro is made up of multiple countries, versus the United States, we just call it the euro dollar. I'm trading the euro dollar today, and you would know I'm trading the euro versus the USD. USD JPY, that is the United States versus Japan. Is Japan dollar worth more than the United States' dollar, or is the United States dollar worth more than the Japan or the yen dollar? And it's called the dollar yen. GBP USD. So GBP is the pound, the sterling pound, and that is the United Kingdom. So GBP USD is United Kingdom versus the United States because it's a battle. I mean, we are all out here trying to win. And of course, we want the United States dollar to be king honcho at all times, but that's just not realistic because all countries have these inter economy situations that will cause their currency to go up or down. All right. USD CHF, I call it the Swiss, but when it is United States versus Switzerland, it is the dollar Swiss. USD CAD is the United States Canada, which is the dollar loonie. I never call it the loonie. AUD USD is the Australia United States, or the Aussie dollar. I always call it Aussie. No matter if I'm trading AUD CAD, which is CAD, I still call it the Aussie. NZD USD is New Zealand versus the United States, which is the Kiwi dollar. Now you notice that the USD is in red. When you have the USD with a pair, it is considered a major Forex pair because the United States is major. Okay. So what that means is these are popular pairs. They have a lot of volume. Um, and they are some of just the major pairs that you would want to start with, as opposed to going down into the exotics and the minors. And we can get into those pairs at a later training date. Again, this is a very basic overview. I'm not going to go too deep until we get a little further along. And I know that you are invested in learning and growing, okay? Don't want to throw the whole thing at you the first time we meet. Not at all. So, how do we make money trading Forex? Well, we can either buy the market or we can sell the market, which is a good thing because when you typically buy a stock, you're just betting on the company to go up. Well, in Forex, we don't care if the currency goes up or down. We can buy the market and make money, or we can sell the market and make money. Um, that is not an issue for us. So in Forex, we have the bulls versus the bears. And no, I am not talking about basket. I am not talking about sports. Look, I'm thinking Chicago Bulls, Chicago Bears. Like, but we are not talking about sports at all, at all. So the bulls represents buying power because when a bull attack with his horns, he scoops up. He scoops you up, he flips you up, and you guys have seen running with the bulls. When those bulls go down, they dip down and they flop them up. So when we speak about bulls in the market, we are talking about buying power. When we are talking about bears in the market, a bear will get up and he will maul you to death. Like he comes down. Okay. Well, anywho, he comes down. So bears represent a sell in the market, a drop in the market. If you hear bears are in the market, they're selling. Okay. Price is getting pushed down, and this can be stocks or Forex currencies. Bulls and bears are used in the market, period. So now you have a little lingo. If you hear the market is bullish, then you know prices are rising or the stock is rising, is going up. If you hear the bears are in the market, then you know now that a sale is on the way. Okay. And I have a visual for that. So a bull market occurs when the prices of an asset in a financial market increases substantially over an extended period of time. Okay, so that is a bull market. It has been going up at least 20%, and is continuing up. Okay. A bear market occurs when the prices of an asset in a financial market decrease substantially over an extended period of time. So, bull market, bear market. Okay, a bull market is a buyer's market, and a bear market is a seller's market. Prices are headed down. So, just wanted to give a little more context because, again, this can be used with stocks. This can also be used with currencies such as Forex. All right. Now, and this is all, again, related to how we make money in the market. You need to know if the market is going up or down. Price can only go up, down, or does not change. And that is called sideways or consolidation. So it can either go up, price can go down, or price does not change. And it kind of ranges in a little area. So, when you are trading Forex, you will definitely need to know your candlesticks. Candlesticks will be on the chart, they represent price. Okay, so let's look at the bearish candle first. This candle contains all of the information that we need for price at the opening of the candle. So each candle is a time stamp. So let's say that these candles represent an hour. So at the opening of the 4 o'clock hour, we're going to say price was at $10. And then it went even higher to $15. And then it went low, way low to $7. But then it came back up and it actually closed right at $8. So even though it opened at $10, went to 15, got as low as 7, it ended up closing at 8. Okay? So that represents a bearish candle. The part in between is the body. That is the real body, that is the real price. And the little wick above and the wick below, these are called shadows or wicks. And same thing on the bullish candle. So price opened at the bottom. So it opened, pretty low. Let's say price opened at $5, went even lower to $1, and then it shot up to $20, but it ended up coming back down and it closed right here at $14. So that showed bullish momentum. It started low and it closed high. Bullish candle, bullish momentum. A bearish candle started high, ended low, which indicates a sell, price went down. Okay? So, just to kind of give another a little more depth information on the candles, and you can definitely screenshot this, okay? This is really, really good stuff. So, the candle body represents the open and close price of an asset. We say asset because you can use the chart for currencies or stocks. So, any asset that is on a chart, this is how you're going to read the candles. The open or close point position depends on whether the candle or the price is bullish or bearish. All right. In a bullish market, the close will be above the open. And in a bearish market, the close will be below the open. Okay. Now, the wick and the shadow, I'm going to let you guys kind of read that on your own. But pretty much the shadow, well, I call it the wick because it looks like a candle wick. They're candlesticks, call them wicks. Okay. The shadow represents basically the high and low of a given period. So within that hour, price may have shot up and it may have went down. But what matters is where did it close and where did it open? Okay? But you want to know that price tried to go lower and you want to know that price may have tried to go higher. So the candlesticks will have the wick plus the body. Now, 85% of all candles have a wick. So that means 15% of your candles may not have a wick. All right. And you want to stay away from those candles. You want to go with the 85 that has wicks. They tell a lot more information. Now, the color of the body shows the direction of price movement. Okay. So green candlesticks represent bullish upward power. red or black usually means decline. And I say usually because you can change the color of your chart. You can have purple and orange as long as you know up and down. One of my mentors uses all black candles, so she doesn't have a red candle down, a green candle up. She just sees price action, and that works for her. I need to know where the bears and the bulls are, so I use red and green. And let's get to that, all right? So, staying with the same information of a bullish market, bearish market, candlesticks. What you guys are looking at right now is the pair pound USD. And you can see this in the top left corner, GBP USD. Now, I told you guys that each candlestick is a timestamp. These candles are on the daily. So as you can see, right under pound, beside British pound slash US dollar is 1D, which represents 1 day. So each candlestick is a day of price. And you can see how price goes up and down. And you also see the red line that I drew. That represents an uptrend. So, again, we're talking about how we make money in Forex. You make money by understanding price. If you know that your currency or stock is on an uptrend, you're going to be looking for buys. You're going to be pressing the buy button. Again, this is very basic. There's a lot more to it, but I want to get you guys understanding how we trade. All right. So I drew my trend line at the bottom of those candlesticks and connected them. And what it shows me is whenever the candlesticks tapped the trend line, I got a push, a rejection from the trend line. So that's what I can expect. I can expect a buy or a push away from the trend line. And again, this chart shows a uptrend. Let's look at a chart that shows a downtrend. This is a downtrend, and again, I am still on GBP USD. However, in the top corner, you see 3M, which means 3 minute. So even though on the daily we were buying, on the 3 minute we are coming down. And I did pretty much the same thing, took the trend line tool and drew a straight line to show that price cannot come above this line. And what happens? Every time the candlestick taps that trend line, it drops. That lets me know, except for this last time, as you guys can see, it broke above the trend line. And we can get into trend lines and indicators later. For the purpose of this, I wanted to show you guys trend lines, a downtrend and an uptrend. And when the particular candle gets close to our trend line, it sells. And this is how we get our signal on which way to go in our actual trade. Do I want to click the buy button and I see that he's on a downtrend? No, I want to catch this sell. All right. So now that we kind of have that understood, let's talk about pips. So pips is how we get paid in Forex. And I may need to go up a slide and come back to this slide. Here we go. So the Euro USD, and we're going to just go real briefly, just so you guys can kind of understand. Again, with my training, I go in depth on explaining because you're invested, you're ready. So here we have the Euro USD, and we have 1.0000. So as you can see, that circled is the pips. So when we exchange, we may say our dollar to the euro dollar is 125, meaning the euro dollar is 25 cents more than the dollar. Well, what we don't see is the pips. You will see the pips when you are trading Forex, and PIP stands for price interest point. So, back to my original slide, you have different lot sizes, okay? Starting at the top, you have standard lot. So you can go for $10 a pip. meaning whenever price changes, when that pip changes from 1 to 2, let's say it went up 1 pip, you get $10. If it goes down 1 pip, you lose $10. Okay? Standards. I'm not on standards yet. Very, very transparent. Okay? Mini lots. And I want you guys to really pay attention to the middle under volume, because this is what you're going to be typing in to your broker when you are putting in your trade and you're letting him know how much you're risking per pip. You're going to either put in 1.00 for $10 or 0.10 for a dollar pip. So it depends on how much you want to risk. And this is why I do not answer the question, how much money you make. I make however much money I want to make. It depends on if I'm feeling risky. Do I want to risk $1 a pip or 10 cents a pip? So I don't answer those type of questions because I don't ask people how much they make at their job. Okay. It is up to you how much you make with Forex. All right. So again, if we are on a micro lot, and don't worry about the units, these are units of the currency. Okay. Just units of the currency. But let's say we are on a trade and it goes up 8 pips, and we are on a mini lot and it goes up 8 pips. We now have $8. But let's say my homegirl with all the money, she goes in on a standard lot and she does 8 pips. Well, 8 times 10, she's up $80. I'm up $8. Let's say my newbie who's just learning how to trade is on a micro lot. Okay. Baby girl is up 80 cents. But the trade was correct because you don't want to be down 80 cents. You don't want to be down $8. You don't want to be down $80. So you have to take your own risk management when it comes to trading. Now, this chart, I want you guys to pay attention to the right side. These are the prices. So the ask and the bid. The only reason I'm asking you to ignore that is because the difference in the ask and the bid is your broker's spread. So they are going to charge you like a couple of cents. In this case, it's 2 pips because as you can see, the bid is 82, the ask is 84. So that's what they're asking for, 84, and the bid is 82. So that will cost you about 2 pips to get in. So if you are on a standard, 2 pips will be $20 for you to get into this play. If you are, let me go back. If we are on a mini lot, then to get into this play would cost us $2. If we are on a micro lot, it would cost us 20 cents to get in on this play. So, again, what we are looking at here is just simply where to find the pricing of the pips, which is on the right side of your scale. Okay, so let's continue. And another way to look at this is, and I promise you guys, the math is easy. But after your decimal point, and this is going back to what, third, fourth grade, you have the tenths place, the hundreds, the thousandths, the 10,000ths. So the pips are in the thousands and the 10,000ths. Let's do a really quick math problem on the Euro USD. Because again, the Euro USD has 4 decimal places behind, 4 numerical places behind the decimal. Okay. So for this example, we are selling Euro USD and the price is at 1.000. And this is just a real easy peasy example because as you can see, we are at 1.0886 all the way to 1.0881. For this particular example, we're at 1.0000. Okay. All right, we got in our trade. We look back and price is at 0.9957. And we want to know how many pips did we move? Well, with a little math and you're just subtracting, you're going to get 0.0043, and it'll look just like this, 0.0043 Because we are in the 10,000s place, times 10,000 is 43 pips. So this is an easy way to just see how many pips you earned, how many pips that you're going for, the price that you started at with the sale versus the price that you ended, which is 0.0043, which is 43 pips. Now, back to our chart. If we just did 43 pips on a standard lot, now, now we're looking at some money. Now we're looking at $43, 43 pips times $10, and we're at 430. 43 pips times $1, $43. Okay, and so forth. 43 times $4.30 or 43 cents. So this is how you make money in Forex. Another example with the chart. So what we have here is a nice sell. I drew the downtrend line for you. And then I used a tool that counts the pips and the how many candlesticks it took. So from the start of my red box in the left corner all the way down to the little red box at the right, this was 19 bars and 19 pips. Okay, so it says negative 19, but when you are reading this ruler, you don't look at the negative. Okay, it moved 19 pips, and this took an hour and 35 minutes. So, depending on my lot size, it depends on how much money I make. So, 19 pips at $4. I want to make sure my math is right, y'all, because something is looking a little not right. So 19 pips times 0.40 is $7.06. Make sure I'm doing this right. So what I did actually, let me go back here because I haven't gotten into margin to let you guys know exactly how margin works. Okay, these are all at pretty much mini lot size, micro lot. So I actually did all of my calculations um, completely wrong. So trying to show you guys a standard lot size there, and that is not correct. Let's see. Okay, and I had to just add some corrections to that because I got my decimal point all wrong. So 19 pips times $4 a pip is $76. 19 pips times $2 a pip is $38. And 19 times, of course, a dollar a pip is $19. Now, if we did want to go low and say 19 pips times 0.05, that is $9.50. Like I have no idea how that happened. And of course, 19 pips times 70 cents, okay, is $13.30. So very important when it comes to where this decimal point is, okay? Because if 19 pips at 40 cents, which is what I have there, that is only $7.06, okay? 19 pips at point 20 is $3.80, and 19 pips times 10 cents is $1.90. All right. So very, very important, as you guys can see, to have that decimal point in the correct spot when you are in fun. And we are going to make money and we're going to compound it. I am not going to fluff you with a dream of making thousands because it depends on your mindset and it depends on your risk management. With trading, it is all on you. You cannot blame a single soul for your losing or your winning. So you have to have the right mindset of prosperity. of confidence, and you have to trust yourself. This is nothing like the typical 9 to 5, okay, where you're depending on your managers. This is all on you and your risk management. So I look forward to, taking this journey with you. I am completely obsessed with it. So I hope that you can also find some obsession with it, you guys. Have a great one.